Hi everybody, hopefully you can hear me loud and clear. Hopefully Anna can hear me. Yeah, good stuff. Okay, just move the chat box out of the way. This is on, I've just gone to the, oops, sorry, let's put that back again. Put that over there. There we go. There we go. That's it. I was just on the 15-second there. Really just to highlight what is going on. This is pretty much what is going on across the markets, pretty much per se. This is on gold. You can see it on the daily down here. That's the range we're trading in, very narrow. Again, yesterday was a great day, lots of two-way price action. But we're trading around the volume point of control here. I'll come back to gold in a minute. Silver's been interesting, but similar sort of price action. You can see it down here on the daily, really trading in these narrow ranges, trading around the volume point of control. And the one thing that you'll notice more than anything else really is the predominance of the volatility indicator. You're going to see it all over the place. You're going to see the importance, as Anna mentioned, the importance of these support levels, resistance levels on price. You've got all the support and resistance based on volume. But as I say, a lot of the volatility triggers here. We have one here. And what you're always looking for is this huge volume, the participation of the market makers, big operators. They're looking to wrap that down very quickly. And on this occasion, we've got a straightforward reversal. But look at the volume on the follow through, very low, telling you that there's really no selling pressure there. And we get the reversal on the buy and up we go, but not that far because we're not in a mode where we're going to break away for the time being. Obviously looking at as far as commodities are concerned, keeping an eye on the dollar. This is the VIX. Just pull the VIX over. That's where we are at the moment. This is on the 1 minute. So, you know, it's all fairly lackluster stuff. We're trading in this sort of relatively tight range of a few points on the VIX. Nothing terribly strong. So I'll just keep an eye on that. Move that back over onto the right-hand side. There we go. So this is silver. But again, as you can see, the volatility, we've got volatility everywhere. We've got the levels. And we've got the volume point of control in evidence all over the place. And if we go over to the, let's have a quick look at oil. See if there's anything developing there. Pretty much the same, very tight range down here. Not so much volatility on oil. Let's have a look at, let's go to the 3 minute. Not a huge amount. And it's really a question of trying to pick off those trading opportunities. And days like this are days where you have to, if you're going to trade, there's only one way to trade, and that's down onto, as far as I'm concerned at any rate, sub a minute. You have to go down onto those fast time frames to really pick off anything of note, because otherwise, if you're going to try and trade this on anything slower than that, you're going to get chopped to liver, absolutely torn to shreds. So it's either a day where you're going to trade, or it's a day when you're going to look at the markets and you're just going to make yourself a cup of tea and watch, and nothing much is going to happen. And you know, there's no two ways about it. What you will see when markets are moving like yesterday, you will see the momentum. You will have levels which come and go, levels which are taken out. You'll see volume, a nice volume building in downtrends. You'll see volume building in uptrends. You'll see better price action. You won't get this this continuous price action within areas. You won't see so much of the volume point of control. It's not going to be highly in evidence. It's you know, it's all of that. So days like this they will test your patience. If you're not very patient and you have the luxury of sitting in front of a screen, then it's probably best if you don't sit in front of the screen all day long, because you will be trading when you shouldn't be trading. As I say, in my humble opinion, and having done this for 20 odd years, the only way you can trade markets in congestion like this and actually come out ahead of the game is to really move down onto the faster time frames. But it's not everyone's cup of tea. You can pick things off on the slightly slower time frames. I mean, there's some classic examples here from a VPA perspective. If you look at the little move higher, for example, we get the start of a move higher away from the volume point of control. Then we get a big injection of volume. Okay, so we've got some buying coming in here because we've got a wick. We got a lot of injection of volume. So yeah, that's okay, that's fine. But then look at the next candle. The next candle is a third of that spread. You've got almost as much volume, not quite, but almost as much. So that's telling you, this is a weak market. This is selling into weakness. The market's not going to go very far. Then you get this candle indecision. That's fine. It's really just confirming what you're seeing here. And then you get a clean candle here. Lots of volume, big wick to the upper body. What is that telling you? It's really confirming. It's not a signal in isolation, because volume price analysis is about putting this all together. You might look at this and think, well, that's actually triggered off one candle. Well, that's true in the sense of if you weren't looking at anything preceding that. But if you look at the signals coming in here with this injection of volume and really not going anywhere, followed by a doji candle, then you get this one. Those three candles together are giving you a sense that the market is weak at that level. It's not strong. It's not suddenly going to rocket up and go to, $40 spot 50 a barrel and $41 and so on and so forth. And that's how to interpret VPA. Then we get the nice cascade lower. Not a huge range. We've obviously gone from 40.10 down to 39.70, but that's pretty good bucks in terms of a big oil contract. No problem at all. Then we come into the bottom. Then we get some more buying coming in here under this particular candle. So there's support coming in again. Nice wick to the lower body. Lots of volume under there. Up we go. Doesn't look terribly strong at that stage. We've got falling volume. Then we're back up into this region. Then what do we see here? We see more weakness coming in. Wick to the upper body. Wick to the upper body. Doesn't look very strong. Falling volume. Then we get a bit more buying coming in, pushing it up again. Now we've got a bit more buying coming in, trying to push it up. Then we've got resistance coming into play. We've got this red dashed line on the accumulation distribution indicator. It's capping off that effort to rally through there. It's you probably can't see it, but there's a little number 5 here. So that means that this level has been tested and held 5 times, so it's pretty strong. The wider the line, the stronger the level. You can see down here, these are fairly minor levels, although having said that, they are in a little cluster of 2. So where you get more than 1 or 2 together, they may be weak in their own right, but when you cluster them in this way, they become much stronger together as a group. And you've obviously got quite a bunch here between 80 up to 85, so quite a narrow range there. So you've got some decent support there. So that's been capped off that rally. And that's how to interpret and read the markets in these current state where they are pretty much trading sideways and not going to develop a strong trend. It's pretty much the same. Let's go and have a look. Let's go see what's happening on terms of the VIX is now flicked up a bit. We've gone to 27.6. We were down at 27.2 a minute ago. Let's have a look at the 3 of them. Here we are. Bottom line on the daily time frame, so you've got the YM, the NQ, and the ES strung out along the bottom. Up on the top here, we've got the 5 minute for the 3 indices, and it is pretty much self-explanatory all around the volume point of control. Lots of support and resistance coming into play. Pretty tight ranges. Nothing tradable unless you want to go down onto the 15-second chart. Let's go over onto the US. Where are we? Multiple time frames, that's the one I want. There we go. Now we're looking at I've got the YM here, but it could be any of the 3. They're all pretty much the same. Now we're looking at the YM. We've got the 15-second here. We've got the 1 minute. We've got the 3 minute, the 5 minute, the 10 minute, and over on to the 15 minute. So just staying on the top line, if I pull up the 15-second, and it's a question of being very quick on your feet. You're not going to hang around in here. You're probably not going to be in for more than a few seconds, maybe. Maybe even a minute at the most, something like that. So it's literally quick fire trading. You're just knocking them out one after the other, trying to get into a decent position. Got some decent buying came in here. We had a volatility trigger. Then we had some decent buying coming in on this candle. Excuse me for a moment. Sorry, frog in my throat. Little bit of buying coming in there, so there's an opportunity to maybe snick some points. The trend monitor is telling you right now that it's bearish. There's no particular bullish sentiment at the moment to this particular trading opportunity, so stick with what the trend monitor is telling you. So if you were taking that trade, you were very much trading against the trend, certainly what the trend monitor was telling you at any rate. Now there's a bit of a trend developing. 1542, I think Powell's on as well, so that may help. We're seeing just keeping an eye on the VIX. That's still at 27.6, so it's up from 27.2. So if you're going to trade any direction, it's short at the moment. Looks as though it might be about to flick up higher. Okay, we've got a nice little price waterfall there, a classic rising volume, falling price, and widening spreads. You know, that's what you want to see. But bear in mind, we're on the 15-second here, so you know this is fast, very fast, and I'm sure it won't suit many people. But if it is also, can I say, a great way to learn VPA at speed, because what you see here will be exactly the same as you see on any other chart, whether it's an hourly chart or a daily chart or a 15-minute chart. It's exactly the same. You've got the same levels, you've got the volume point of control, you've got support and resistance coming into play, you've got the volume coming into play, obviously. Trend monitor is still bright red, so that's fine. So we can just sit with this for the time being, see if we can nick some more points out of it. Now remember, each of these points is worth $5 if you're trading a single contract. So I'll leave you to do the maths yourself, but you can take, if you can take, you know, 5-10 points out of this, terrific. You know, on we go, down we go, volume rising, that's nice. I've got the volume switched off. The volume doesn't come in until the bar closes, which is why you're not seeing it live. And the reason for that is because I've got so much data streaming in on across this and other platforms as well. I don't want to overload the systems too much. There we go, you know, nice down candle, nice volume, that's okay. All in agreement. Okay, we've got a bit of a doji candle come in there, indecision. VIX is up at 27.7 now. Let's pull that over so you can see that. There we go, this is the VIX on the 1 minute, 27.7. So we've gone up from 27.3 to 27.7, which is why we're seeing what we're seeing at the moment. Move that out of the way. There we go. Looks as though we're going to carry on a bit further, so that's fine. And that's the power of the trend monitor. It just keeps you in through these little phases. There's no change, nothing. It's just telling you, stick with the trend. Don't be alarmed, don't be frightened, just hold with it, just stay with it and maximize your profit. Now it's flicked up to 27.8, which is good, what we want to see. Let's just go up onto the 1 minute, see what's happening there. Slightly slower time frame. Trend monitor's red, which is good, just confirming what's on the 15-second. Now what we're doing here is nice because we're coming down to potential level here. This is a level of 3 and one below it at 2. So these levels are relatively strong, certainly coming into play. The VIX is now rising. It's gone to 27.9, which is great. So we just sit with the trade and carry on making money. Trend monitor is now starting to transition over here on the 3 minute, which is good. Gone into dark blue. On this one, we didn't actually have a dark red. We went from bright blue into darker blue and then straight through into bearish red. We didn't get the dark red, which is, it doesn't have to appear, but it's there. But sometimes it skips that if it's a strong change in trend, which in this case, clearly it has been. Okay, the VIX is now shot up to 28, which is great. So we just sit with the trade and bank the money. Just see what the others are doing. Probably doing very similar things. Let's have a look. There we go. That's the YM that we're on. This is the NQ and that's the ES. So yeah, they're all doing pretty much the same. All a little bit weak at the moment. And that's fine. Just keep an eye on the VIX over there. It's still up at 28. Just go back to where we were. That one. There we are. Okay. Fine. Obviously, if this is going to translate into a longer term trend, then we want to see this one translate through to red and really confirm what's going on over here. Bear in mind that you know, with Powell speaking, you could see sudden volatility erupt. So you've got to have that in your back of your mind the whole time. You don't want to outstay your welcome here. VIX is still holding at 28. Not seeing any buying at the moment. Not strong buying anyway. Okay, we're starting to see that transition now over here, which is good. Yeah, that's fine. Okay, let's go and have a look at some of the other time frames. Let's go down to a very slow time frame, 10 minutes. What have we got here? Well, we've gone through this level, which obviously came into play higher up the chart. So we've crushed through that. Longer term, then clearly what we are going to be doing battle with is getting through this region here, which is pretty dense in terms of volume. So we've cleared the price-based support, if you will, for a trade to the downside, but obviously we've got a large amount of volume here, which is going to cause the market to struggle through that area. It's going to need some volume to get through there. On to 5. Okay, we've got this cluster of potential support here in terms of price. Very strong level down here at the bottom. Cluster of 2 or 3 here. VIX has just come off a little bit. It's gone 27.9, so it's dropped a point. Just keep an eye on it, just see if it's going to start reversing more strongly. Nope, it's gone back to 28, so that's okay. So sit with it, stay with it. A little bit of weakness there, decent volume, trying to rally. Let's pop that up full size, a bit easier to see. There we are. See how the volume's building. We're in congestion phase here. We've got a volume point of control up here. But if this volume here exceeds this volume up at the top here, then the VPOC will drop to that level. It moves the whole time. It's not a static indicator which is anchored forever in one place. If the market breaks away now, then clearly it won't move because the volume hasn't quite got there. But if it does get there, then this will drop down to that level. Okay, looks as though it has. There we go. So the VPOC has now dropped down to this level. So we're now trading at fair value, to use a market profile term. In other words, there's no bullish or bearish sentiment. Fair value. There's no bullish or bearish sentiment to drive the market one way or the other. We're trading at the volume point of control. We've got a channel of price action. We've got a ceiling of resistance above, which is just being tested now at 80, 81, and a floor in below. We're starting to see first sign of potential change in trend monitor. And could well be time to exit this one. Get out of what we've got. We've got a nice, taken a nice haul. So get out of that one. Okay, sorry, I've got the chat box closed. I'm just keeping an eye on what's going on. Let me answer the questions. Sorry, I don't understand the first question. How can we see while you are trading live the US market? I don't trade off this machine, but this is how I would trade. What I'm doing is I'm actually explaining to you what I would do in my head if I was trading this on my own systems. Yeah, we're not allowed to give trading advice anyway, so that's the reason we don't. When you talk about oil, which oil you're referring to, Tony, that's the WTI futures contract, which is the one I have here. So it's basically US crude, WTI. Does TradeStation have 15-second chart? It does indeed, on yes, on version 10 and above. There are 2 versions we're launching, which is 9.5, which does not have sub 1 minute, but on TradeStation version 10, TradeStation Securities, in other words, it does. Just starting to see that reversal kick in now. And we're starting to see that because the VIX is starting to roll over. Got up to just 28, fractionally over 28. Now it's on the way back down. And that's part of the reason that we are now seeing this reversal take effect. So we're seeing a bullish sentiment reverse, the bearish sentiment. we've gone through, as you can see on the trend monitor, we've got the classic reversal in colors. We've gone from bright red into darker red, into darker blue, out the other side into bright blue. The support levels came into play. The resistance has been taken out. We're now trading up around a low volume node on the 15-second. See if we get through there and on back higher. And that's it. And this is trading in, pretty tight markets, not trading on a strong trend, which frankly, everybody can do, because you are literally riding on a train of momentum that carries everybody with it. Days like this, it's much more difficult, it's more tricky. You've got to be light on your feet, you've got to know what you're doing. Volume will help you, the indicators will help you. It's very much about moving down to the faster time frames. But if that doesn't suit you, then you've got to sit on the sidelines and wait this out until we get some bigger momentum days. So I'm going to wrap it up at that point, and I'm going to run along. Hope you've enjoyed this particular session. Hope it's given you a flavor of what you have to do on days like this. I find days like this challenging, but challenging in a positive way, because they make you sharp. When you're trading on days where the market is really fast moving, and to be frank, most people ought to be able to make money on those days. Like yesterday was one of those days, what we call the big money days. Those are the days when you literally do have to make big bucks and jump in. As I've said many times before, the floor traders that we've met over the years, they all say the same thing to us. The large percentage of time they used to go to work was really just small change. In other words, one day they'd be up, one day they'd be down, really, just scratching around, not making huge bucks, losing on one day, winning on the next, losing the following day, etc. Maybe come out the week slightly ahead or slightly down, whatever. But when those big days come along, those are the days that they would really truly make the vast percentage of their yearly earnings. Not very many of them, but very big money days. And that's why we call them big money days, because that's what they are. They are big money days when you have to pile in and absolutely load up and make as much money as you can quickly, because the markets have momentum. On days like this, it's much more labored. It's much trickier. You've got to be light on your feet. You've got to go down to the faster time frames. You've got to be prepared to do that. If you're not prepared to do that, then it's really a case, as I say, of sitting it out, and you just have to wait and be patient, and perhaps pass on the day and wait for a bigger move, or a move that's triggered with news. If Powell says something and there's some momentum in the market, but again, that is going to be triggered with volatility. So again, you've got to be careful, but at least there will be something driving the market. At the moment, there's very little driving it. So there we go. I'm just going to wrap up. You can find all the indicators over here at quantumtrading.com. MT45, I've been using NinjaTrader here, TradingView and TraderStation. Yep, TradeStation is coming, 2 versions, TradeStation 9.5, which is TradeStation Global, which will be on version 9.5, which will not have that sub 1 minute time frame, because it is being driven by your interactive brokers account, which does not offer that. But if you're on TradeStation Securities, which is version 10 and above, you will have that, because it has all the array of timeframes you could wish. Fantastic platform and great charting. And you've got radar screen there, which is just a wonderful scanner, truly awesome. You'll find Anna over at annacooling.com. You'll find all the books there listed either in Kindle or in paperback. And finally, the Forex program. For those of you, I know we've got 1 or 2 of the Forex students here today, but you'll find that over at quantumtradingeducation.com. It is called the Complete Forex Trading Program, because that is precisely what it is. It covers everything you need to know to trade the Forex markets with total confidence, starting with a psychology module, fundamental analysis. You've got relational analysis, talks about all how the markets are all connected through the prism of risk and money flow, technical analysis, deep dive into VPA, and the mechanics of trading module. And then you've got all these other modules down here. There's over 200 hours of video in here. It's all backed up with our VPA trade room, where Anna and I host it every day, and you're more than welcome to join there as well. So that's it. Enjoy the rest of the trading session. Could be a bit tricky. Could be a little bit difficult for the rest of the day. It's hard to say. What's curious is quite often when we end these webinars, we then find 15 minutes, 30 minutes later, the market starts to move. So, the fact that the market has not moved at all at the moment Don't write the day off. You can sit and watch, wait, and then once it gets to various levels on your chart, you can look at the VPA and make your judgments accordingly. So don't write off the day entirely just yet. There's several hours yet to run. We will see what happens. Thank you very much indeed for coming along today. Hope you've enjoyed it. We will see you next week, next Tuesday, same time, same place, either in the Forex room at 7:45 UK time or here at 3 o'clock US time. So we're back on Tuesday now, running through to the end of the year. If you have any questions, more than happy to answer them. It's david@quantumtrading.com or anna@annacooling.com. So stay safe, enjoy the rest of the day, and enjoy the rest of the trading week. And bye for now.